bought some gold a week or 10 days before the last move down. So I didn't really catch that correction, but now the price is higher than when I bought it. So you just have to do your best, because it's more about protecting your long-term viability of your savings. And the BIS, they've abandoned this Enbridge project because they've seen that Russia has kind of used Enbridge to create this another M kind of system within the BRICS.
In today's news recap, Wall Street bereft of bears, Main Street firmly bullish as geopolitical risk breaks gold out of post-Trump slump. After enduring a 2-week beatdown following Donald Trump's election victory, gold prices saw a strong rebound this week, posting gains in every trading session and gaining nearly $150 by Friday afternoon. Spot gold kicked off the week trading at $2,563 per ounce, and precious metals traders made their intentions known early on, spiking the yellow metal up $10 in the first hour or so of trading and pushing the price to $2,594 per ounce by 8:15 p.m. Sunday evening. Gold continued to test the $2,600 per ounce resistance level throughout the European session, finally breaking through on Monday morning. From there, it was a series of slow and steady climbs punctuated by sharp spikes, higher as a combination of gold supportive data releases and worrying geopolitical headlines pushed the yellow metal upward. The next level of resistance to be breached was $2,625 per ounce, with spot gold breaking through just after Tuesday morning. After a brief pullback following a top just below $2,640, spot gold once again resumed its steady uptrend, hitting the then weekly high of $2,641.42 shortly after. Midnight brought the only significant pullback of the week, with spot gold falling from $2,638 back down to $2,621. But the yellow metal then resumed its multi-day uptrend, and by the North American market open on Wednesday, it was trading above $2,645 per ounce. Economic data then took a back seat to geopolitical news as the ratcheting up of missile strikes and bellicose rhetoric pushed the price steadily higher, with spot gold hitting a high of $2,673 per ounce shortly after Thursday. It then set a fresh weekly high of $2,690 by 10 p.m. and broke decisively through the $2,700 per ounce resistance level around 4:30 a.m. EST Friday morning. Now, before we dive back into the best clips, I've got a deal you cannot afford to ignore. Black Friday's here, and so is your chance to lock in ultimate online security with NordVPN. Listen up. This is especially for you stackers out there. Keep your data safe, stay anonymous, and grab this exclusive offer. 3 extra months free plus a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
There's a war or something, they shut the markets. We wouldn't know the price of gold, but I think when the markets reopen, people would realize how important it is to have something physical. As for the price, I'm kind of surprised how quickly gold, silver not so much, but how gold has rebounded. And it's even made a new high today in British pound terms and in euro terms. Yeah, the dollar is strong against the fiat currencies, but I think ultimately you need to measure the dollar versus gold. So the dollar is weakening again. Some people think there might be another wave down for the gold price. That's possible. But what it shows is that the higher we go, or in the gold price, the more, exciting it's going to get. And that's why you shouldn't get excited and you shouldn't get despondent when you get ups and downs. Maybe try to buy a bit on when you get these big move down, if you can, if you have some spare fiat currency. I mean, I bought some gold a week or 10 days before the last move down. So I didn't really catch that correction, but now the price is higher than when I bought it. So you just have to do your best, because it's more about protecting your the long-term viability of your savings. And unless you're trading, of course, and that's a different game. You should just try to keep dollar cost averaging. Silver, that's rebounded today as well, but it's still way undervalued. I still like silver. It's frustrating though, but one day, hopefully, it will unshackle itself from the supply of paper out there. It's much easier to sell an ETF and when you actually buy gold and you hold a coin or silver, you realize how precious it is that you want to hold it. But when it's just an entry on the computer, you can just click the sell button and get out. So that's another reason to hold physical. Financial markets, and by that I mean you have to trade through brokers and stock exchanges, futures exchanges, or ETFs. They would be affected, yes, if they had to, if they said the undersea cables connecting Europe and New York they've been hit. Yeah, the markets would cease to trade. People wouldn't know, they wouldn't know where prices were. So yeah, physical gold though wouldn't be affected, even though you might not have a price set by COMEX or the LBMA in London. But the ETFs or anything that's has a counterparty attached to it, a fund, a fund manager, a bank, that will be halted for however long they think is necessary. And that happened during World War One, when World War One broke out in 1914. Even the New York Stock Exchange, even though the U.S. wasn't in that war, that closed for a few months. It's very much possible. In terms of price, we don't know. We would have to wait until they reopen the markets, and it happened recently, Elijah, back 23 years ago, after 9/11, they closed the markets. I don't know if you remember that, for a week or so, for some days, and then it started trading.
In today's news recap, higher supplies to the UK lift Swiss October gold exports. Gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China and Hong Kong subdued. Swiss customs data showed on Tuesday. Supplies from Switzerland, the world's biggest bullion refining and transit hub, to Britain in October reached the highest level since June 2021, according to the data. London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October. 31 has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second largest gold consumer and a major importer, rose in October from September amid festival purchases. Before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
From Russia, that they want to build a new monetary system outside the dollar system, and I think that the U.S. doesn't want to give up the privilege of running the world's currency and payment system that easily. Even President Trump, who professes to be pro-peace, says that he's going to punish countries with 100% tariffs if they trade amongst themselves in their own currencies, which sounds a little bit strange, because if Indonesia and India want to trade in their own currencies, why should they trade in dollars? But so yeah, that's the other thing. This faction, the banking faction, the financing faction, and I noticed as well recently that the BIS, they've abandoned this Bridge project because they've seen that Russia has kind of used Bridge to create this another M kind of system within the BRICS. So, and we don't know, Elijah, what we're told publicly of what's happening might be just like a cover. And behind the scenes, these factions, be it Chinese, Russia, US, EU, UK, they're trying to work out who's going to do what, financially. But the thing is, these attacks from the Ukraine now with these new missiles from the US and UK, well, it helps those companies that produce these missiles. So it keeps the military-industrial complex going. Wars as well are really expensive, and you can use the excuse of, they're attacking us to get the public behind you. You might even start selling some Liberty bonds like they did at World War I to keep financing the debt. So yeah, ultimately, unfortunately, it's like all wars are about money and also the health of the state. I've said that before, that wars are the health of the state. And when the state is in trouble like it is now, and by state I mean like the US, the UK, and the EU, when we have so much debt, the government is so big and people are waking up, war is a way to rally people behind the state. So it's not just a banker's war, but a statist war as well. It doesn't scare me, all this talk of war, because what can you do about it? And, that's the way I look at it. And a lot of it is to make you scared, to not live your life without fear. So that's how I see it.
Thanks for tuning in to today's video with Mario Innecco, where we explored why gold and silver remain the ultimate hedge in these unpredictable times. Now, I want to hear from you. Are you stacking gold and silver, or do you have a different strategy for protecting your wealth? Drop a comment below and share your thoughts. I love reading your perspectives and insights. If you found value in this discussion, give it a thumbs up, share it with a friend who needs to hear this, and make sure you're subscribed to the channel so you don't miss future updates on precious metals and market trends. Let's keep stacking, stay informed, and continue preparing for a sounder financial future together. See you in the next one.